Hello everyone and welcome back to the channel. I hope you all had a good week. Today we're going to do some TA, but first I want to apologize in advance for any audio issues if there's a little bit of echoiness this time around. I cannot for the life of me find my headphones, so I'm just going to wing it. Alright, let's jump right into it. So last time we left off on the 16th, Bitcoin was right here at like the 39K level where we had talked about the dip that occurred before the price had bounced and then formed a higher low. That continued a bit, and we've had some more consistent lower highs since that point, meaning that this is a temporary bearish signal for the time being. All right, so if we take a look here, we're on the daily chart. You'll see that I have the year open marked for Bitcoin. That's around 28,990 level, and that's what it just bounced off yesterday. Monthly opens are often a draw for price for Bitcoin. So it's notable, but it's not too surprising that this is where the bounce occurred. What we've seen over the past week is that Bitcoin has been consolidating as expected before breaking the bearish yesterday. If we go down to the 4-hour here, it's very likely this isn't so much as a natural occurrence as it is manipulation of the price in order to trigger the stop losses and liquidation levels on over-leveraged long positions that are still remaining in the market. The most common case for this is traders thinking that the dip we talked about on the last time wasn't just a buying opportunity, but a new bottom for the market, going all in, placing a stop loss right before the previous low, which would be right about here, because there's millions of dollars worth of Bitcoin here. Meaning the moment the price dips below this, they're in the red and they're out of their trades. This is a common hunting tactic for whales to profit off of. You can see the dip is matching with this massive underside wick here known as a hammer candle, and the high volume, which we talked about last week, which confirmed that this was likely the case. Now this is actually a bullish indicator, and what we're looking for on the charts here is momentum, which means barring any further manipulation, we should be looking to see the price continuing to move back upwards after this last bounce. So someone in my last video asked me about how to plot Fibonacci retracement. I didn't really want to do that in the comments, so I'll do that here quickly. For higher time frames, you'll want to make sure that you set your chart to log. Remember, the basic idea of log charts is that they're a tool used to measure an output of orders in magnitude instead of linear scaling. But for lower time frames, you'll want it off. So for this time frame, we want to click on the local maximum high, usually called the swing high, and then drag our cursor down to the local minimum that sits after that swing high, usually called a swing low. And this should give you a decent approximation of the fib levels that you should be looking at when doing your TA. What we're seeing is Bitcoin closing and holding above this 0.236 level, which might be an indication of a new bullish movement. And if we don't maintain above this level, we might see a continuation back down to the 30K levels. So be careful about opening a long position if that's what does happen. What we should being the operative word, hopefully see is Bitcoin bounce around a bit as it makes its way back up to like the 35K levels to at least make another lower high, indicating a continuation of the current bear pattern for now. Keep in mind it's fairly likely that that's where we're supposed to form the next lower high, and that we just end up lasting through that level and start to reach towards the 40K levels again, which is where the past significant high is. And then if we do break through that level, our prior all-time high levels are up at 42K. I'm gonna now get rid of this fib retracement and I'm gonna go back to our previous chart. So looking back at our old fib retracement on the 1 week time frame, we still have 1 day left to go in our weekly candle. We're hoping that it's going to close above this 1.2 level, and even if it doesn't, that doesn't mean that we're going lower. For fib levels, the higher the time frame, the more likely the occurrence, but mostly we use it as a way to assess the probability of a move occurring. Ideally, what we want to look for is a slow and steady move in the upside instead of a violent upward movement. Stability in this case is more important than speed if we want to remain in this overall bullish trend. Quick little reminder here before we change gears, if you'd like to support the channel and see it grow, feel free to head to the description below or the pinned comment. Use the BitBuy link there if you would like. If you do so, thank you. All right, so on to the news. As I'm sure most people have heard at this point, the new Treasury Secretary has voiced concerns over the use of cryptocurrencies. We check out our first article here. Janet Yellen says cryptocurrencies are a concern in terrorist financing. Janet. Cryptocurrencies are of a particular concern when it comes to terrorist financing, potential Treasury Secretary Janet Yellen said Tuesday. The technologies to accomplish this change over time, and we need to make sure that our methods for dealing with these matters with tech terrorist financing change along with the changing technology. Cryptocurrencies are a particular concern. She then goes on to, very eloquently, provide exactly zero proof whatsoever to back up this claim. But it's still enough damage to potentially slow the rate of Bitcoin adoption, had that been the end of the story, which it isn't. Janet Yellen suggests curtailing cryptocurrencies such as Bitcoin, saying they're mainly used for legal financing. Janet Yellen, President-elect Joe Biden's nominee for Treasury Secretary, suggested on Tuesday that lawmakers curtail the use of cryptocurrencies such as Bitcoin over concerns that they are mainly used for legal activities. So what's really important to know is that this whole debacle is truly a non-starter and doesn't actually change anything fundamentally about how Bitcoin is being used. Perhaps a month from now, this kind of FUD will be chalked up to the old school tactic of, Nation X banned Bitcoin, now please dump the market. If she's so truly concerned about money laundering, perhaps she should start with, fiat, where the problem is exponentially larger, with problems like offshore tax havens, money washing any capital raised from illegal activities, or, I don't know, perhaps some of the investment banks whose entire model is moving money out of lucrative but unstable countries and into stable, wealth-preserving ones. If you want examples of this, you can look at, the kind of fines that Deutsche Bank, HSBC, Danske Bank, or JP Morgan has had to pay in the past for profiting off billions of dollars of money laundering activity done using their services. And there's plenty more that you can find with a quick Google search. But, before I digress too much, the point is it's a common mistake for people to hear the word cryptocurrency and then immediately think Bitcoin. But that's not expressly true. With Bitcoin's public ledger, if she's aware even of the basics of how Bitcoin works, she can't actually be talking about Bitcoin. And, important to note, she never specifically mentioned Bitcoin. If she's dead set on going after money laundering activity in the crypto space, it's far more likely that she's going to go after something like XMR, which is Monero. Since those privacy coins are specifically designed to not be tracked, and that's far more likely of a region where crypto you're going to find something like money laundering. Another reason to not panic like the sky is falling is that the very same Janet Yellen pointed out that cryptocurrencies most definitely have a future, since even she is able to admit that they have the potential to improve the efficiency of the financial system. Treasury Secretary nominee says crypto has potential to improve the financial system. Pretty to the point, right? I think it's important we consider the benefits of cryptocurrencies and other digital assets and the potential they have to improve the efficiency of the financial system. The future Treasury Secretary also said that she wanted the United States to be a leader in the digital asset and financial technology areas. She added that she would help develop a regulatory framework for cryptocurrency and other fintech innovations by working with the Federal Reserve Board. So, this doesn't exactly sound like someone out to kill Bitcoin or crypto in general. It's more likely than not that the new Treasury Secretary were to try to take out our beloved crypto, it would be for more nefarious reasons of maintaining tight governmental-led financial control over your and everybody else's money. And that's what we're seeing play out, but not in the way that you think. Yellen has clarified that she'd like to implement the regulatory frameworks of cryptocurrencies, just as I spoke about. And as much as you may not like regulation, it only currently leads towards further legitimizing Bitcoin and other crypto markets, which may end up driving further mass adoption as more skittish and ignorant investors now feel safer moving their money into the space. Some more Bitcoin news. Nextech AR Solutions, a Canadian augmented reality company, recently jumped out of the crypto market like a frog that just hit boiling water after hearing about a potential flaw in Bitcoin. They even made a very minor $200,000 profit by doing so, but they may end up kicking themselves later on down the line when they realize the kind of profits that they stand to miss out on while holding on to a currency losing purchasing power by the day. On the 22nd of January, Nextech stated, "Our investment in Bitcoin in the past was part of our capital diversification strategy with the intent to maximize long-term value for our shareholders. This sale reflects our awareness that something potentially has changed with Bitcoin, which is seen as the digital version of gold. The news that has emerged is that a critical flaw called a double spend may have occurred, which, if true, allows someone to spend the same Bitcoin twice, undermining faith in the system. This just proves that it's not only individuals susceptible to FUD, but entire companies too." Had whoever manages Nextech's capital been applying the mildest amount of critical thinking to this situation, it may have prevented them from panic selling. Firstly, if a double spend were to occur, would it had not been more likely that in the more of the decade or so that we've had Bitcoin, during that time at all, this flaw definitely would have been exploited or discovered already, say perhaps around the first time we hit the 20K levels back in 2017 when everybody was going crazy. And secondly, the fact that Bitcoin has a massive trackable public ledger. There would have been evidence of this event like this occurring more than just once, which it didn't all to begin with, but we'll get into that. Fundamentally, Bitcoin is math and algorithms. Unlike a shady employee at a bank, it doesn't need to decide what to do next, it just simply executes the commands embedded within its functions. It's a predictable system, not a person with wildly changing whims, hence the trustless nature. Now, onto what really happened. So, Bitcoin's blockchain split, as it typically does when the network gets updated, and the split between blocks registered the same wallet in two separate blocks, effectively meaning that the supply of Bitcoin would have doubled in relation to whatever that wallet happened to be holding at the time. Now, here's a part that the large portion of the media forgot to mention. The Bitcoin network only validates one of those wallets. One, not both. Meaning that there's still only one wallet with one amount of Bitcoin in it, with no duplicates, because the other copy of that wallet is considered invalid by the network. It's almost if Satoshi Nakamoto, who made Bitcoin, had already thought about this and solved this problem. Let's take a peek down here. It went down like this. Someone had sent this amount of Bitcoin to this address, but set the lowest fees possible, 1 Satoshi per byte or less than a fraction of a cent per byte of transaction data. Since the fee was so low, the transaction took a while to confirm, so the sender tried to outpace it by sending what's called a replace by fee transaction, RBF. Instead of the RBF replacing the slow transaction as intended, however, the lower fee transaction cleared first and made it to the block that was mined on the longest chain. Meanwhile, the higher fee transaction found its way to the stale block. The final result, this amount of Bitcoin, is recorded as an existing on the address, this address, on the irrelevant transaction history, while this amount of Bitcoin exists on the same address, but onto the relevant transaction ledger. And there's a little picture down here kind of giving you an idea of what's going on. There's really not much more to cover for this story, except perhaps that Michael Saylor potentially becoming the new owner of those recently dumped Bitcoin, but that's just speculation. The reality is, despite all the media FUD, despite the incredibly misleading information given to us by the Fed and the media, Bitcoin is truly living up to its title of being, honey badger money. We've already recovered above the 30K levels from another recent and amazing buying opportunity below 30K. And all I can hope is that you bought the dip, because the FUD can only last so long before it's beaten out by the fundamentals. So what are your thoughts on all the FUD? Did anyone get shaky hands with their Bitcoin holdings? Let me know in the comments down below. All right, everyone. That about wraps it up for me today. I hope everybody enjoyed the video. Thank you all for watching, and I'll see you all soon.